We're joined now by Dr. Chad Hart from the Iowa State University Department of Economics. Appreciate the time. Thank you.
It's my pleasure to be with you today.
All right, so we've started a new year. Everybody wants to look ahead and see what's in store for us. 2023 had a variety of different challenges. How do you see where things stand as we begin 2024?
I've described it as agriculture sort of returning back to normal. So if I could take you back a couple of years, back in 2021, 2022, what we were seeing, especially on the crop side of agriculture, was really strong prices, which led to some near record farm incomes across the country. And so farmers were enjoying a really strong farm economy 2 years back. 2023 was sort of the year of transition where we saw those prices and incomes fall a bit, but we're still around break even. So if you think of it, prices are around what it costs to produce the crops that we grow. And that's where we seem to be settling out here as we look forward into 2024. So it's not terrible, but it's also not great as we look at the farm economy.
So, do some of the numbers get a bit deceptive because things had been so unusually high?
Oh, sure. I mean, and case in point, we're here to talk a little bit about land values. And you think about the strength that we've seen within our farmland values over the past few years. The survey we do here at Iowa State, it showed in 2022, 29% growth year over year. 2021 was 29% growth. 2022 was 17. 2023, we still saw about a 3%, 3 to 4% growth rate in those farmland values. So we have seen not only prices that move fairly strongly, but the values within our land and within our farms grew with them.
But you also you knew going through that that's not sustainable growth. There's just
Yeah.
no way.
Well, that's the deal. You can't keep up that level of growth rate. But what we're seeing now is sort of, I'll call it a stabilization within that value. So that, okay, incomes have come back, but we're not necessarily seeing those farmland values retreat because the potential forward income, looking into the future, is still, it's a good outlook. And so that helps hold and fortify that value over time.
So why not? Why would there not be a correction, if you will, with those values? What's keeping it where it is and
Yeah.
still appreciating?
Well, that's the deal. I think when you're looking here, the old joke in real estate is, let's face it, they're not making any more new land.
Sure.
So the idea is we're dealing with a limited base, especially with when we're talking about agriculture, highly productive agricultural farmland here. And you also see a lot of folks who are interested in let's call it the wealth potential those acres offer. And so not only do we have farmers that have been investing in farmland because they're looking at the growth of the crops or livestock they're going to create on that land, but you also have folks like, the the banker or the lender or the doctor that grew up in a rural area that's looking for a place to invest some funds to diversify their portfolio. And they've seen what's been happening within the ag land market. Well, they're looking to, again, add something to their portfolio to help stabilize their wealth. And farmland does that in a way that diversifies their total portfolio different than stocks or different than like a CD, so that you're attaching yourself to the farm economy, which doesn't tend to necessarily move at the same rate or at the same, in the same direction as the general economy.
You do a good bit of travel with your work with extension, and what are you hearing from folks doing that?
Well, I think, like I said, when I talk to farmers about 2024, I would say they're cautiously optimistic as they're looking forward here. They have watched their prices and income shrink over the past year, but they're still producing at a very good clip despite some of the weather problems that we've had. They continue to find, like I say, prices around their cost. And so they see these windows of opportunity for profit, and they know that they're in a decent position to capture those over time.
Most of your day to day looking into trends is what? What particularly piques your interest?
It varies from day to day. So, right now it's a lot of looking at how our future prices setting up to shape how farmers will utilize their land this coming spring. So a lot of this time between January and March is sort of trying to guess how many acres of corn we're going to plant come April, how many acres of soybeans, what sort of changes are we going to see across not only the Iowa landscape, but more importantly, I especially look at, across the entire corn belt. Because when you think of agricultural production here in the US, I was actually very stable in terms of what we do here. But what we do tend to be is, the markets we're in, especially corn and soybeans, we're influenced by what happens outside of Iowa line, especially, places say like the Dakotas and Kansas and Nebraska. Those are areas that tend to swing what they plant. So some years it's corn, some years it's soybeans, some years it's wheat. And wherever that acreage swings does have an impact on the prices we see here in Iowa. So that's why I sort of watch that at least over these next couple of months.
It's largely been 3 years of drought. Were you surprised with how successful growers were with production, despite top line numbers at least showing this incredible drought for 3 years?
Oh yeah, it is. Well, that's the deal. It's been an amazing run of productivity, as you mentioned. I'd point back. We've actually had drought somewhere here within the U.S. Very strong drought, at least for the last 4 years. This drought really started in 2020, and here we sit in 2024, and it's still here. Yet, when we look at our crop production here within the U.S., it's hard to see the drought's impact in that production. Case in point, this year, we actually produced the largest corn crop the country has ever seen. And that's with, D2 and D3 drought across most of Iowa, a good chunk of that growing season. It has been incredible. It's been an amazing combination of, let's call it the changes that farmers have put in their production practices to help conserve the water that the crops can utilize. There's been a lot of investment within the ag, technology side, whether it's in the seed or in the machinery, to again make sure that the crop can grab basically any drop of moisture it can find to help produce that crop. And then we've gotten lucky with some timely rains despite the drought going on. And every once in a while you get that shot of moisture right when the crop needed it. And it's led to some of the biggest crops we've ever seen despite the drought.
In Iowa, over the past week and a half, we've had these two unusual, almost foot deep snowfalls, which I suppose if you're an optimist means that whenever this finally melts, it's going to bring a little moisture in the off season.
It's gonna bring some in. I mean, and that's the deal. Through December, we stayed warm and got a few shots of rain
Hmm.
in there. So we are seeing some moisture trying to replenish that subsoil because when you think about the water we use for the crops, it's not just the rain that falls during the season. It's also the water that's embedded in the soil before we even plant the seed. We do utilize that water within those crops. And so I like to call that the savings account that we start out with. Well, we've depleted that savings account over the last couple of years. And so, yeah, hopefully some of this moisture that's sitting on the ground now is able to be absorbed and we can utilize that for the upcoming crop.
Speaking of accounts, inflation's been, although December, I suppose, ticked back up a little bit, but for the most part, the last year and a half, finally starting to see that back off for anybody, looking at borrowing as part of their expansion or getting into the market. Obviously, that's key to them. What, and we'll see if the Fed is able to lower interest maybe a time or two, maybe three, we'll see in 2024. So as you look at the outlook of values, are you thinking low single digits in appreciation, value appreciation? How are you looking at that?
Well, that's the deal. As you say, I mean, the inflation bug really hit us throughout 2022 and going through 2023. The Fed, I would argue, has done an amazing job sort of adjusting interest rates up very quickly, knocking this inflation down enough that people can see the light at the end of the tunnel. My own sense is that they'll probably hold the interest rates, at least for the first, say, 4 or 5 months of the year, at these levels to make sure that we keep inflation down. But then beyond that, they probably will start to loosen those interest rates up. And so given that we're sort of settled into where these interest rates have been, and we've been here for a few months, and we've seen the land markets sort of hold value throughout that. Because normally when you raise interest rates, especially that quickly, it usually provides a lot of downward force on the real estate market, on the land market. We haven't seen that because I would say land is still looking, especially ag land, it still look like an attractive investment for everybody out there, farmers and non-farmers alike. And so that's still holding as we go here into 2024. And then if we do start to see these interest rates loosen towards the end of the year, I think that does add to the appreciation in the land market because now you're making it a little easier to get that loan to purchase that piece of ground. You're making that, interest on the operating note for that farmer a little less expensive so that they have more free cash to maybe explore looking at that next 40. And so I think we're going to see land values sort of, buck the trend here of normally high interest rates, meaning decline here. Well, we've got some things that are, like I say, helping hold that value, eh, which is different than when we've seen these interest rate spikes in the past.
So if to follow this scenario, if we do see the Fed back off maybe a little by little here, nothing dramatic, but more little by little, do you see any difference in, each year we don't see a lot of land change hands, right?
Right.
Since it's just slowly backed off, do you see kind of current trends continuing there, or does something change because these interest rates may inch down a little?
Well, that's the deal. I think as we start to see those interest rates come back down a bit, I might expect to see a little more land change hands, but not a lot. The idea is we have seen that land turnover definitely shift down over the past decade, decade and a half. I'd say back in the early 2000s, an average year was probably 2% of all of Iowa's farmland would flip over in ownership. Nowadays, the average is probably more like 1.5. And I think we're going to maybe slowly build up to that 2% rate again, but it's going to take, a couple of years probably for that to occur. And as we're looking here, I'd say the dynamics of what we're seeing within that land market is changing a little bit as well. In that, you do see, let's call it a concerted effort within agriculture to look at how we're going to get the next generation of producers on the ground. And so there's been more emphasis, whether it's through the ag industry itself or through, for example, as we look at some of the state policies that we put in place to provide tax incentives or shelters to incentivize the passage of that land to the next generation of farm operators.
Hey, we appreciate the conversation. It's a good outlook to get 2024 going here. Thank you very
It
much
is.
for the insight. Appreciate it.
Thank you, sir.